Hi, this is Dustin with Dustin's Dollars. Today I'm going to be talking about Rocket Lab, going over just an overview of the company, going to be talking through their financials, and I put together a small model for the next couple years to sort of show where the stock could go and what the company could do. Before I begin, let me remind you that I'm not a financial advisor or a financial professional of any sort. All opinions I express in this video are mine and do not represent those of any company or any other individual. I do not currently hold any position in Rocket Lab, although I will very likely be buying some. That's a foreshadowing there. So this video should be for entertainment purposes only, because I could be wrong about everything that I say in this video. You need to do your own research before making any investment decisions. All right, so Rocket Labs. First, I'll give you just the 1-minute overview if you're not at all familiar with the company. So as the name sort of implies, they launch rockets. They provide launch services to make it faster, easier, and more affordable to access space. That's one sort of division of the company. And they also sell supporting stuff. And this is a quote from their 10Q. Spacecraft design services, spacecraft components, spacecraft manufacturing, and other spacecraft and on-orbit management solutions. So basically, they want to sell other services and components for space launches and space related missions, so that if they're not the ones launching, they can at least have some components that they are selling to other companies in the space. And we'll talk through how those segments are doing. Historically they've been focused on these, they call the small class launch vehicles, and selling those sorts of services. I believe to date, if I had this correct, they've had 37 successful missions and they've placed 171 satellites in orbit. Their most recent, I think it was their most recent launch, did have a problem. They went into quite a bit of detail on that. And I believe that they, have identified it and fixed it. They've root caused it and have a fix for that for going forward. And so that, presumably we will see more continued success on the small launch side. And they do have sort of 2024 all the way contracted for, I think, roughly double the amount of launches that they're going to do in 2023. They're also developing this larger, they call it a medium class launch vehicle. They call that Neutron. The smaller one is called Electron. Those sort of the name for those programs. And so that's something that they don't have operation yet. They still have more steps to go through. I think their current target is to plan to have that operational for the end of 2024. Their guidance for 2024, they don't come out and exactly give you that guidance, but if you read between the lines, they're kind of guiding for about 50% total revenue growth and improved margins in 2024. And, a couple things, the founder does still hold about 10% of the company, 10% of the stock. And, again, I'm just going the quick overview here, but I would say the biggest risks of the company, they do have quite a few. I would say execution is a big one, both on actually just making everything work and developing that medium class launch vehicle and achieving the target margins that they have. Competition is also a huge risk, right? There's a lot of different companies in the space sector. I'm not even going to say that I understand the full sector. So that's a really big risk for them. And they clearly are not the overall market leader. I think everybody would agree that's SpaceX. And, financing is also a bit of a risk. I mean, they do have some cash, and I'll go through that, in a minute. They do have some cash on hand right now, but they're burning through that. And so it's very likely they're going to have to get some more cash from somewhere. And I'll go through that in a minute. So I know that was more than a minute, but that's my sort of rough overview of the company. If you just want the Cliff's notes here, the things I'm going to talk about today in slightly more detail. So let me get into it. Just again, a bit more on their launch vehicles. So they have this Electron, and as I said, they've launched a bunch of missions with this, right? This goes all the way back, and they have them all listed out here. I think there were 37 missions that were successful, and they've had a couple issues with some of them. They also own a couple different launch complexes, I guess they call them, right? Places where they can launch these from. I think they own a couple, I believe, in New Zealand, and then one in Virginia, if I understand correctly. And this is fairly well established. I'm not sure how many launches they had pre 2022. Let me go through it. Sorry, I have some graphs and some numbers here I can go through. This was my this is bleeding into their guidance for 2024. But if you look at this, this is their number of launches per quarter, and I got this. I tried to add these up and get these numbers. I believe they did one in 2022 Q1, and then if you go by quarter, it goes 3, 3, 2, 3, 3, 3, and then they're going to do planning 2 in the current quarter in 2023 Q4. But then in next year they have contracts and they're planning to do many more launches, 5, 6, 3, and 8. That is their, and I think that's, called out in their investor presentation. That's what I had originally pulled up. If you look at it here, this is their guidance for 2024 for Electron. Again, that's their smaller launch vehicle, 5, 6, 3, and 8. And I believe these are already contracted, already on the books. This is not what they want to do. This is what they've already got lined up to do. And so you can see graphically, clearly they're going to be planning on more and more than they ever have done. And hopefully we could see that go up even further in future years. But this is what they've actually got. I think they've even have some bookings into the first quarter of 2025. If you listen to their earnings call, they mentioned that, but I don't think they gave any numbers there. And this does speak. I'm jumping around a little bit, but this does speak to, in my opinion, the competition risk, right? I actually do not have a good handle on the full sector. It's very complex. There's a lot of companies, a lot of things. It's in its infancy. However, the fact that they have a solid backlog and they're already booked through all of 2024 and even into 2025 with this particular small launch vehicle does give me some confidence that they're not lagging behind, right? If they were lagging behind, they would not already be booked up. And they've already talked about their target pricing for this, so they're actually trending upwards. Maybe that's something I can get to in just a moment. Since I'm on the topic, let me find the numbers here. So they also report, and maybe this is too small for you to see, but their revenue per launch. So this is this row here. I pulled these numbers out of their quarterly and annual reports. And throughout 2022, they were, other than in the third quarter, they were mostly getting, $6.3 million, $6 million, revenue per launch. And when they talked in the earnings call, they said, look, we're looking to make those numbers. Our target is about $7.5 million. So that's a 20 or 30% improvement, I guess, 25% from about $6 million price point to 7.5. And I think they've insinuated, they didn't come out and say it directly, but they basically said, we achieved that for nearly all of our 2024 launches. And so that's really good to see that they're getting higher prices, right? Higher revenue per launch, and they have a full backlog of that. I mean, that to me is a pretty strong signal that they're not falling behind. They're not really, losing to a bunch of competitors here, at least in the short term, right? Long term, who knows? It's a fast moving sector, but that to me, it does give me a little bit of confidence that competitor risk is, as of right now, they're still competitive. Let me just put it that way. So I guess I could walk through a couple other of the graphs here. And I'm going to go through this very first one just to underscore and let you know, they are actually burning money right now, right? They are not profitable. And maybe I could talk about this on the launch side. There's a two big segments, as I mentioned. There's the launches, and then there's space systems. On the launch side, these two rows here, and again, and maybe it's too small for you to see. I might be able to zoom in just a tad bit more to make the numbers bigger for you to see here. This top row that I have highlighted is their revenue per launch, and then this next row is their cost per launch. And you can see their cost per launch has been higher than their revenue per launch, at least was for Q1 of 2022. Also Q2, Q4 was significantly higher. Again, even in this year, you can see cost was higher for Q1. It flipped where they were actually profitable in Q2. And then in Q3, they were definitively profitable, and I think they expect that trend to continue going forward. And this is on a gross margin basis, right? There's still R&D expenses and SG&A, but this is at least in a gross profit from launches. They ended up being, profitable for these quarters, but it's not consistent, right? They were unprofitable 1, 2, 3 of the past 9 quarters. No, 4 of the last 7 quarters. Sorry, I totally misspoke that the first time. And hopefully we see this trend continuing though, because the profit margins were actually much higher in Q3. And one of the big things that does give me confidence that this is going to continue is, a lot of that cost, I have to imagine, is just their fixed costs of the launch complexes and associated things there, where if they're able to pack in more launches, then those fixed costs are going to be spread out over a higher number of launches. That also, combined with the increased revenue per launch, should really make these margins go up. And I think they've stated their target for this is roughly 50%, which seems like a big jump from, having just their very best quarter here at 26, 27% gross margins to jump all the way to 50%. But we really don't know how much of that, at least I couldn't find it from my initial research. I couldn't figure out how much of this, this cost per launch and this overall cost was really fixed costs versus, variable costs. And so it could very well may be that once they get to 8 launches or what did I say, 6 or 8 launches per quarter, that sort of spreading out those fixed costs really does get them much closer to a 50% gross margin. And that's, I don't know if I said it out loud, but that also will combine with increasing the cost of the launches, right? Getting that $7.5 million dollar revenue per launch, will clearly help with the margins, right? Every incremental dollar of revenue just goes straight to the, improving the margin. So that I think is a really good thing to see. I know we talk about space systems because my overall point was their operating income here, that they are operating income negative and cash flow negative right now. Although we see the trend upwards in the launch division. For the space systems division, they are consistently profitable. Their gross profit margins, I have it here as a percent, has been, and I may or may not have a graph, sorry if I didn't put it together, but if you just look at this row here, you can see, excluding the first quarter of 2022, where I think they hadn't quite acquired their last space systems company, Solero. I believe they acquired them in that quarter, so maybe that's not really an apples-to-apples comparison. But looking forward, they're consistently around about the 20% gross profit margin. And sorry, the actual numbers then here from Q4 of 2023 onwards, those are some projections I was making. But these are the numbers to be looking at here. And they've been around the 20% mark. They did have one quarter where it was lower, but pretty consistently around 20%. And I think that's good to see, right, that they are actually profitable on that. And, the revenue is actually ticking upwards, where they had their highest, I believe their highest revenue quarter in Q3 of 2023 at $46 million. That was up from basically for all of 22. They'd have one $40 million quarter. I guess Q4 was very close to 40 million, 34, 36. So we see that trending upwards, and that's really good to see, especially when it is profitable there. And, if we look at their overall, maybe I could just look at their 10Q and pull this up. So we can just look at the most recent quarter here. That gets you to overall revenue in Q3, which I believe was their highest grossing quarter, of $67.6 million, gross profit of about $15 million. But then you look at their R&D, their SG&A, those expenses are at about $54 million. They're clearly not operating income positive, right? They're burning quite a bit of money on a GAAP basis here, $39 million, let's call it operating loss. So that's quite a bit. Now, and so this gets me back to sort of the context for this graph that I had. And this is, each quarter, what their quarterly operating income has been. So this is their most recent quarter, was that negative 39 million. And, they've been in this range, negative 30, negative 40 million. It actually got worse in 2023. It's trended upwards over the past, 2 quarters at least, very, very slightly. We're not seeing them come close to zero or break even anytime soon by these numbers. Now, one thing that I do want to call out, because this is relevant, I'm going to go straight into their cash burn rate and, how long is it going to be until they would run out of money or absolutely need to raise more money. Is there a good chunk of these expenses actually are not cash expenses? And you can go through here, you can see they have depreciation and amortization and stock-based compensation, all of which go into these numbers, cost of revenue, R&D, and SG&A, but obviously are not cash out the door, right? And so that is something to consider when you're actually evaluating this against their balance sheet and looking at the cash they have on hand. So maybe I could start there just briefly. Cash on hand that they have right now, they have about $141 million of just cash, $147 million of marketable securities that are, they call current. And they also, if you look down here, have, about $82 million of non-current marketable securities. And I think they have this broken down later on. I believe these are all basically government bonds and treasuries. And then I also included they have restricted cash somewhere in here on the balance sheet. Just for the sake of including it in cash, I included it. I'm not quite sure. It probably says what it's restricted for. It's a pretty small amount, so I didn't really dig into it in my due diligence quite yet. But, overall, I would say, if I just add those numbers up, what's that about? Well, I have it down here. I add those up, about $374 million total of cash and marketable securities on their balance sheet at the end of Q3. So that's what I'm looking at. I'm looking at their burn rate here. But getting back to their operating income real quick in terms of cash, you can look through the 10Q and you can see they have depreciation. Let me find it. You can see it right here. Depreciation expense. Yeah, so they talk about it here in the 3 months ended September 30th. This is how much we accounted for on our GAAP, cost of revenue, R&D, and SG&A. This is how much of that was depreciation. You could scroll down just a little bit more to a very, very, close section. Talk about similar thing for amortization, right? This is the expense that they included in those numbers, and they have a similar one somewhere else for stock-based compensation. The stock-based compensation is actually very significant. I don't know if I can find it briefly. Yeah, so here it is right here. I was able to find it. You can see this is a lot, right? For the 3 months ended September 30th of their between cost of revenues, R&D, and SG&A, that was $14 million. And again, stock-based compensation, is from a shareholder's perspective, is a very real expense. At the same time, when we're looking at their cash burn, it doesn't, they're not burning cash. They're diluting the stockholders, which is not necessarily not equivalent, right? And we should differentiate those two. And so when I look at their actual, if I subtract those other expenses out, and I did that for each quarter, starting from Q1 of 2022, this is what I call it their cash operating income. And again, these are negative because it was actually an operating loss per quarter. And so instead of being in the $30 to $40 million range, this is in the roughly $10 to $30 million. You can see even in in 2023 Q3, it was what's that? Maybe 16 or 17. I could get the actual number up here. What I calculated as. I pulled the chart from up here. Cash operating income of negative $17.5 million. And again, this is their operating income, but then taking out all the non-cash, depreciation, amortization, stock-based compensation, all those things, which gets you to a lower number. And so their actual burn rate in terms of cash is, from operations is lower. Now, on the flip side, they are also they're making quite a lot of capex, right? A lot of expenses on that side, and so I didn't split out that on a quarterly basis, but what I did look at is just their cash burn each quarter, right? And so this is cash burn from operations, and so I'm not going to go through those, but I did get it. Actually, sorry, this was just their cash burn. I actually ignored it because they didn't have significant equity raises, as far as I could tell, in 2022 onwards, and or new debt. They do have some debt on the books. I'll talk about that in just a minute. But they're just as their reduction in cash. So this is a very, very simplistic way to look at it. But it does sort of go back to what I talked about their operating income. If we look at this, their cash burn rate, just the reduction in cash quarter over quarter, has been about $30 million. It ticked upwards in the most recent quarter for 44.5. And again, I think a lot of this is their capex that they're doing, right? They are expanding. They're putting money into the Neutron development, right? That medium class launch vehicle to bring in future revenues. But if we just look at their cash spend, and I very simply model off of that, I put together a quick, a run rate from that, and then I looked at how much cash they have remaining sort of on the balance sheet at the moment. Say, how many quarters does that roughly predict for them to have if we are just looking at it from the cash burn rate? And like I say, they do have a loan that is due in 2024, and I'll talk about that in just a second. So that is not accounted for in this chart. So this would be if they somehow refinance that without having any expenses out of pocket. Their cash burn rate, again, if I look even the trailing 12 months, is add these four numbers up here, which is basically the difference between the end of Q3 in 2022 and 2023. Divide that out by their current cash pile, and you kind of get a run rate of about 10.5 quarters. So that would be 2.5 years where they could, if things were all equal, if the past 12 months predicts the future in terms of cash burn, that would give them roughly 2.5 years where they could fund their operations as they have been doing. And so that was actually pretty nice. I also looked at it, if we separate it out and we said, hey, what if they pause their capex? What if they were just burning the cash from operations? And this would be like a hypothetical if they really wanted to hunker down, let's say the debt markets and everything, they just can't raise money anywhere for any reasonable terms. And they say, hypothetically, like, we're going to pause our capex. We're going to pause, expanding and acquiring assets for new launch complexes. And we're going to pause even, capex towards Neutron, or let's say really, really dial it down. Then if we just looked at what they're burning in terms of operations, like I said, that was like $17.5 million in cash in Q3. It was more in the prior quarters. But look at that, you get a run rate that's even higher, right? They could fund just their operating losses, your cash operating losses for about 18 quarters if I look at things in that respect. And so that actually is a pretty long run rate for a company like this that is growing. So just a couple things that I'm looking at, and this is what that graph looks like. The way you should read these graphs, sorry, the blue line is their cash on hand, right? This is their actual cash on the balance sheet per quarter. That's obviously been trending down because they are burning cash. The red rate, the red line shows the graph on the left. It shows their cash reduction per quarter, and the graph on the right shows sort of their cash operating loss. I explained that a minute ago what that is. It's not their operating losses, or operating loss minus the non-cash expenses, as far as I could split them out. And then the yellow bars here, which go to the right axis, show you how many quarters of runway they would have if you just sort of divide those two out. And so again, the takeaway here is they do have quite a bit of runway, let's say maybe 2 to 3 years, if we ignore the debt. And so let's go to the debt just real quick. They don't have a lot. So if we look at their balance sheet, scroll up here, this debt did become current in Q3 because it's due in middle of 2024. And look down here, this is the current installments of long-term borrowings, I believe, is what we're looking at here for their debt. Again, I'm not looking at operating leases and that sort of stuff, just actual debt. They owe about $105 million. And so they do have the cash on hand where they could pay it. But I mean, if they pay that back with their cash, that would very clearly, cut that run rate, quite significantly. That would take a big chunk out of that. After another quarter of cash burn, then they'd probably be down to a year or less in terms of their especially in GAAP terms, right, where they look at their GAAP losses. So if I go back here, actually let me just read it. So I don't have their earnings transcript up, but I expect them, and they reaffirm this on their earnings call, it's not a lot of debt for the company, so hopefully it's not too hard for them to refinance. And they got asked about it, and I have the quote here. This is from the earnings call, and hopefully I get the quote right. They said, "We are actively in the process of looking to refinance that. We've got several options. We are pretty far down the path with a few different providers, and they range from doing equipment lines to kind of similar structures to term loans that the Hercules loan represented." And so they even said that they're hoping to announce something soon, maybe almost certainly before the end of the year. That was their quote. And so even if we just see refinance, and especially they did refinance of a slightly larger loan, and I think this is a pretty reasonable thing for them to get as the company is actually growing, is getting more profitable, that somebody say, hey, I'll lend you, $300 million, which would not be a large amount of debt, relative to their market cap. It's what, a $2 billion company right now, somewhere in that vicinity. You'd have $300 million of debt on the books with, revenues that are in the, what's that, $250 million range, like that. I could very easily see that, and it's not really a high risk for that, especially when you look at let's see, what is their PP&E on the balance sheet. I didn't have it off the top of my head. They have $135 million of PP&E. I could see somebody doing that, and maybe I'm off base here. Maybe they would really only get, a loan that's roughly in line with the property, plant, and equipment that they do have on the books right now. But even that, they have enough to secure, another $105 million, call it $120 million of cash to pay off what they have and just refinance it out a couple years. So to me, I don't think that's a big risk. The bigger risk is looking forward a year when they've burned through a lot of this cash and now they have less than a year's worth of runway. I don't know why I can't say that word properly today. That's when it really starts to get to be maybe tougher for them in terms of negotiating position. So it will be good if we do see that before the end of the year, so they can negotiate from a position of relative strength of having quite a bit of cash on the books at the current moment of time, while they get that refinance. So that, to me, it is a risk, but I think that's one that it's not a big risk given where things are at right now. A couple of let me just go through the graphs here, because I did put a little bit of thought into what I have here. Their gross margins, I talk about this, they are improving quite a bit on the launch side. So I have 3 lines here, and let me see if I can, hopefully that's big enough for you to reasonably see. There is shows quarterly numbers, and this is on a percent basis. The yellow represents the percent margin in that quarter from the Space Systems division. The red shows the percent gross margin for the Launch Services division in that quarter. And then the blue is their overall, right? So that's a blend of the two lines. And you can see Space Systems, as I mentioned before, has been consistently profitable. Launch Services has not been, and then, sort of flipped over to profitable in Q2 and was even more profitable in Q3. And they're projecting that to be even more profitable in, going forward. And similar for Space Systems, they actually said that they believe they're going to achieve, 30% gross margins on that, if I understand correctly, on in a couple quarters. I don't know that they were particularly specific about that timeline, but that's their target. And they basically said, yeah, we're almost sure we're going to get to that point. It's just a matter of time. So that was good to see, that both, as they are also increasing revenue, the margins are going up on that as well. Now, here's one thing that we should 100% call out. They have been diluting. They have been increasing the shares outstanding, right? They do have that stock-based compensation. I think they also even pay a little bit of they pay a little bit of shares, I think, in interest on that loan. It's not a whole lot, but it is a bit. And this shows their. By the way, the bottom of the y-axis here is not at zero. It's at 450 million. This is just so you can see it. If I made the y-axis end at zero here, it looks like a pretty flat line because it hasn't been a ton of dilution. It's been about 8% per year. I think that's the rough CAGR that we've had here. And so since the end of 2022 Q1, so not quite even, I guess it's been a year and a half, right? We've seen the number of shares increase from 463 million shares to about 486 million shares. So there has been continued dilution. You can see that has just marched up quarter over quarter. Again, basically probably due to the stock-based compensation and the interest they've been paying on that loan, payment in kind. They've been paying paying in shares for at least a little bit of that. Now, what I will say, though, is their revenue has been increasing. And one other thing I should say, I believe there was a big increase. There may have been a big increase. I don't recall, Sarah. I don't have it right in front of me. Around about Q1 of 2022 when they acquired Solero. And I don't know if I've mentioned that explicitly, but they have done it. The Space Systems division especially, I believe, has been grown largely through acquisition. Right? They've acquired a number of different companies. I think they talk about it. Solero. See if I can see a place where they've listed this out. They've acquired, well, I guess I don't want to really look through it right now, but they've done a number of acquisitions here, and that's how they've grown out that division quite a bit inorganically, let's say. But the point that I was getting at is their revenue. This is a chart they put together that shows their revenue per 1,000 shares, quarterly revenue. You can see this has actually been trending up, right? So they've been, even though the shares outstanding has increased, the revenue has been growing faster than their shares outstanding. I did talk through their number of launches per quarter. And this is, I think I mentioned this before, their revenue by segment. I don't know if I called it out explicitly, but their Space Systems right now is much larger than Launch Systems. Now, I think this graph here even includes their guidance for Q4 of this year and Q1 of next year. They did issue both of those. Here's one other really interesting and positive thing that I like to see in a company that I see in Rocket Lab is their backlog, right? They've got a backlog of contracts that will be future revenue, or should be future revenue, assuming everything goes to plan. And they've got quite a large backlog at the end. This shows over time where it's been, let's say, roughly flat, right? It's been as low as over the past, since the end of 2022 Q1 through to today. It's been as low as just a tad under $500 million to the end of Q3, their highest amount ever of $582 million of backlog. And so that's a lot of future revenue they've already got booked. And so to me, that's a really good sign. And again, that also gets back to what I talked about earlier of the competition risk, right? They've booked quite a lot of future business. I really don't think that they'd be able to do this while also improving margins without having, sort of a strong foothold in the market. I haven't talked about it too much, but I'll talk just real quick, because they don't have any actual revenue or numbers yet to talk about. But Let's talk about Neutron. Sorry, where is Neutron here? Just to give you something to look at while I talk. They've achieved a number of milestones. Maybe here's the better one where you can see they have successfully done a bunch of tests for this, and they kind of reaffirm their timeline where they say, hey, we think about the end of 2024, we're going to have this much larger, launch vehicle that can send up more satellites at a time, or carry even humans. And various things, right? There's a lot that they can do with this, where they're still developing this vehicle, and they think it's going to be operational probably for actual missions in 2025. They had a bit of back and forth with some analysts about, hey, why aren't you booking this thing already? And they more or less said, we're going to book it once we're very confident, right? Once we have a line of sight to when it's actually going to be operational. And mostly that's because until we've shown a lot of positivity, positivity in the sense of results showing our vehicle actually working, people don't really want to book because they still view it as high risk. And so they're in Rocket Lab would be in a very bad negotiating position. They'd have to go to maybe some bad terms on those, or really, really reduce pricing. And this is something that they alluded to, and they said, we had this issue with Electron. And I do wonder if this is part of why, I don't have a graph for it, but I talked about their revenue per launch was lower through most of 2022. They had these $6 million revenue per launch, and they say, hey, our target is $7.5 million. And that's a pretty big gap, especially when they're losing money on every launch. It's not like they said, well, we really just want to raise prices because we want more profit. Like, they're losing money on all these launches. And I do wonder if some of these lower revenue launches that they had were launches that they signed well in advance, when Electron was not quite as proven. It was viewed as a higher risk, and so they had to just compromise on price in order to get things going. So that is a bit of speculation on my part, but they basically insinuated that's what happened with the Electron, and we don't want to do that for Neutron. So, and I mean, as a shareholder, I think that's good. I don't think that they need to, right? I mean, given that they do have Electron, they've got quite a bit booked, and the space system is also growing. I don't really think that they need to do that for Neutron. I could see if they were in a different position, they didn't have quite as much of an existing operations, they would need to do that in order to kind of keep things, to keep the narrative alive for the company. But I don't think that's necessary. And so that's really good. I read a bit, and I don't have the sources right here, but if I understand correctly, they're targeting roughly like a $50 million revenue per launch for Neutron. And they'd eventually like to get to 50. They think that it's possible to get to 50% margins, gross margins also on that. And so that's kind of the numbers that I'm using, or the target numbers that I'm using in a projection. So I put forth a very, very simple projection model. And this is where I should really, really call. I'm not a financial advisor, not going to give financial advice here. This is how I'm looking at things, for myself, and looking forward to the future, and to the, things where I'm filling in gaps and kind of reading between the lines, and even being a bit optimistic here. So, but I'm going to walk through this model entirely and get to how I think that sort of plays out for the company in the next couple of years if things work out well. So for 2024, we do actually have firm guidance on this. 22 Electron launches. I put in a number, so here's my model for Electron is just this section here. This row is the number of launches in the year. This is the revenue that they actually achieve per launch. This would be the total revenue, right? Just multiply those two. This row here shows what is their gross profit margin percent that they end up getting. And then this row here just actually, multiplies it out and says, okay, fine, what is their in that year gross profit from Electron? And looking forward, I kind of, in terms of number of launches, assume that they did. This is not this is basically no assumption at all, because this is their guidance and their actual contracted launches for 2024, 22 launches. Then this trends upwards for the next couple of years. I assume they could increase this, 28 in 2025, to 35 the next year, to 50 the next year, and then to 65 the following year. And so I'm assuming they're able to increase by about 20% per year. I think that's roughly what this would come out to. And I don't know what the constraints are. I don't know what their bottlenecks are in this business. But that seems pretty reasonable to me, given that in 1 year, they're basically going from, I think in this year, like 11 launches to next year, 22. So it doesn't seem out of the question that if they can double in 1 year, that they would be able to increase by about 25, maybe 30% per year for the next couple of years. And that, hopefully we'll end up seeing that, and you can let me know what you think, if you think that's too too optimistic, but that's how I'm modeling it. And then for the revenue per launch, I'm assuming that even in 2024, they're still not getting that $7.5 million target, but that they do achieve that in 2025, then that stays flat. And I'm not adjusting for inflation and everything, so these numbers would go up for inflation every year, but I'm also not then discounting it back. So let's just keep things in today's dollars. Assume that they do achieve that in 2025, and they're able to keep that pricing through to 2028. And their margins, they said that they think they can get to 50%. I'm not even that optimistic. I mean, I'm close to that, but I assume that in 2024 they're going to close a lot of that gap, right? In Q3, I think they got to, was it 27%? Where's my numbers here? 26.76% gross margins for Electron, and then that's just their reported cost per launch versus the revenue per launch. I think their actual margins that they reported on the segment operating results were pretty close to that, about 27%. So this is a pretty big jump that I'm assuming. But then again, we saw quite a big jump here where from the reported numbers, they went from in Q1 negative 15% to Q3 26%. So that's a huge swing. I'm assuming in next year they can get much closer to that 50% mark and achieve 43%. And then I just sort of walked this up slowly up to in 2027 and 2028, 48%. And I assume again this is going to go up by them just refining their processes and getting reusability right. I don't know that I don't even think I had time to talk in detail there, but I believe a large portion of why those margins jumped very recently was they now started being able to reuse portions of the Electron vehicle where previously they had not been able to. They just hadn't done it yet. There's both the reusability and just greater fixed cost absorption, right? When then they have more and more launches, just some of those fixed costs are going to become a lower and lower percent of their overall expenses, which means they get higher gross profit margins. So that is my projection for Electron that I'm using for this model. Now let's also talk about Neutron, right? I'm assuming they don't have any paid Neutron launches in 2024. And I'm even assuming that, let's say, that goes slower than expected and that they don't end up having any, let's say they don't get that operational until middle of 2025 and that they are able to get one paid launch in 2025 from Neutron. But if we look at that and we say that's $50 million of revenue, and let's even assume their very first launch is very unprofitable. Let's assume on that one launch in 2025, they still have negative 25% gross margins. That they get everything working, but they haven't refined anything yet. It is what it is. They eat the money, they eat the cost because they're still in development, and that their gross profit margins on that are, they end up with gross profit of negative $12.5 million from that one launch. And then in 2026, I assume that, hey, they've got operational and they're able to get 3 launches, right? So they go from 1 to 3, and that may be a big jump, but I think that, that would be like 1 per quarter, with 1 quarter having a 0 in 2026. And then I assume they're able to get it to be a little bit profitable, the 20% gross profit margins. And maybe that's too optimistic, but I think I'm hoping that they will have some experience from Electron that they can start to, from the beginning, not necessarily from the beginning, from the very first launch, but from, once they actually get things up and running in 2026, they're past all the tests. They've even done one real launch in 2025, and that they can get things to be at least somewhat profitable. So 20% profit margin on that does get them to a gross profit of $30 million for the year. And then in 2027, I assumed 5 launches, and 2028, 8 launches. And again, I don't actually know how realistic these are. This is just me trying to ramp up what I hope are realistic numbers, assuming that market demand is there, assuming that competitors aren't eating their lunch at the moment. So again, talk back, there are quite a few risks with this, but this is this also, I'm almost not saying, hey, I think they're going to hit 2024 and have 10 in 2025 and 30 in 2026. I think that those would be massively unrealistic expectations. But that I do think if they get this to be successful, seems to me that the market is there, and there will be, some use, especially as the overall space market itself grows. They're still even a fairly small player, I think, even at, 1-3 launches, for the year in 2 or 3 years from now. So that is my assumption. I assume that their margins, that they are able to improve. You get to about 40% in 2027 and the 45% in 2028. And again, maybe those are too optimistic, but they've said that they think 50% is feasible, and so it doesn't seem unrealistic to me that 5 years from now in 2028, they would be able to get pretty close to that once they've been doing this thing for a couple of years. So that would get you all the way in 2028 to $180 million of gross profit from the Neutron program. And so that would be fantastic if we end up seeing this. Now, for space systems, it's a lot harder. I'm not sure what really to expect from this. So what I just did was improving margins up to about the 30% gross profit margin percent. And I just looked at a revenue growth year over year. I started with roughly what their guidance is for 2024. They didn't give full guidance. I've sort of pieced together a couple things, but I came up with about $222 million for 2024. And I don't think this is too unrealistic, because if you look at their backlog, right? And their backlog just for space systems, $331 million for space systems of the backlog at the end of Q3. And they talk about they're going to start delivering on these contracts. And in the earnings call, they even have some pretty bullish statements of, hey, they're chasing some really large additional contracts to add to this backlog from space systems. So it just makes sense to me that this, that they're going to get, as I said, I don't think $222 million in next year is way off base. And I didn't really know what to look for future years. This could be wildly off in either direction, but I just said, hey, let's look at a flat 15% CAGR over the next couple of years. And so that gets them from 2024 numbers of $222 million of revenue up to $388 million in 2028. And I also looked at their margins, and I said, historically, they've been around 20%. Let's say they do marginally better and get about 22% overall in 2024. And that walks up just 2% per year to achieving 30% gross profit margins in 2028. And so you walk through all of that, and it gets you in 2028 up to about $116 million in gross profit from space systems. Now, add all these up, you get to the numbers for the whole company here. That gets you, from 2024 revenue of projected revenue of $380 million up to 2028 to about I'm rounding $1.3 billion of revenue. So this could grow into a very massive company. And I don't even think this is out of the question, right? I think these are reasonable numbers. They have been executing. They've got a pretty big 2024. And, again, I walked through all of my assumptions to get to this point. It does seem like quite a bit of growth, but I don't think any of these numbers are totally unrealistic given the state of the company. And so we really could see, between 2024 and 2028, what's that, a 3x in revenue, maybe even more, and even versus 2023, like a 5 or 6x in revenue in 5 years. I don't think that's out of the question. And in fact, I talked through my assumption. There is some upside even to this, where they could over deliver on these numbers here. And again, just to be 100% transparent, these are my numbers and just projections. I don't have any inside knowledge, and so these could be totally wrong. Again, don't make financial decisions based off of what I'm saying here. This is how I'm looking at it, of what I think is a realistic growth trajectory for the company. And again, gross profit would increase up to about $500 million in 2028. Now, we should talk about the expenses side, right? I also increased the expenses by 10% per year. And the reason why I did that for both R&D and SG&A, on the R&D side, I think they already have quite a bit of R&D spend in place, right? Because they've already gotten through, as I mentioned, where's the investor presentation? They've already done a lot for Neutron, right? They've been developing this thing for years. They've probably got a pretty sizable team already working on this. It's not clear to me that they're going to need to, let's say, double the size of this particular team in order to further develop the Neutron vehicle. I'm not really sure why they would need to, considering how far they are already. Maybe I'm wrong. I could be misunderstanding, but it just seems like it's late in the game for them to really ramp up R&D spend for Neutron. When they think they're going to have it operational by the end of 2024, you really think they've already got all the people in place and hired now that are going to be needed in order to do that, or at least nearly all of them. So it just wasn't clear to me that R&D spend is going to increase that much. So I kind of just went through a 10% increase in R&D spend every year, 10% CAGR here. And so that gets you to R&D spend in 2028 of about $193 million. Again, SG&A, I have no visibility there into what that's going to cost, but I just went 10% glide path, 10% CAGR up, so that gets you to $175 million, about maybe 176 if you round it, in SG&A expense in 2028. So subtract those off and off of the gross profit, and you get to an actual positive operating income for the first time in 2027, which again might sound like really far away for folks who are looking at the company now and hoping that they're going to get there sooner. But that's what I see as realistic. I think they are going to be operating income negative, meaning they're going to have an operating loss probably all the way through 2026. Maybe in that last quarter of 2026 or so, if things are really going well. Maybe they have some profitable quarters in between there, but I think overall, again, using these numbers, that's really where it gets you. And the big thing that really swings here is the profit from Neutron, right? I really just don't think that's going to be a meaningful contributor to profits, likely until 2027. If you just look at the timelines and be conservative about what margins they can get, they're going to get some from it, with my projections in 2026. But $30 million is a small fraction of what I project their overall gross profit to be in 2026. And so it really doesn't start to get significant until 2027, and then even more significant in 2028. So that's really the driver as to why this flips from unprofitable to profitable. And it's really where you start to see the fruits of the labor of all of this R&D spend that they've been doing for years and years and years. And that's also why I don't think these, assuming that they are doing a reasonable job of attacking or of targeting a good market and keeping costs roughly in line with that, right? They will have spent hundreds of millions of dollars over the years. And so it's not unreasonable to me to think that once this actually gets ramped up, that they will be getting, revenue in the, $250 million, almost $500 million pretty quickly, because, they've spent so much money getting to that point. Like, it just has to, I'm not an insider in the space industry, and I'm not even an expert in the space industry. So I could be missing something, but that's really part of my inference that goes into my thesis here. And so getting back to the numbers here, you swing from an operating income of, negative $103 million, or operating loss of $135 million, $134 million, negative $80 million roughly of operating loss, and then to a positive operating income in 2027 of $39 million, and then in 2028 becomes a much more profitable company of $161 million. And so if I then go down and I take their final operating income in 2028 and say, in 2028, how might the stock be valued, right? That's really what I'm doing all this projection for, is to really get to a final number, to have an idea of where could the stock head, right? Not just the company, but the stock. By the way, I also looked at their shares outstanding. I just did a straight 8% CAGR on the shares outstanding. That got me, at the end of each year, end of 2024, about 525 million shares outstanding, all the way to the end of 2028 to about 714 million shares outstanding. So that would be quite a bit more, right? And again, from the current shares outstanding, that would represent 60 or 70% dilution from today. It's quite a bit more shares. Also seems realistic given their stock-based compensation that they would need to get to this point. And so if we look at that, and this model also ignores the debt. The reason why is because that $100 million of debt it's a very small amount, right? Even if they were, let's say hypothetically, they will refinance, and they turn out $105 million of debt into $300 million to get them the cash they need to get through to this point where they are actually positive. Because I think if you roughly do it, that might be enough that they would need, plus a little bit of buffer to make sure that they're secure throughout that timeline. Even if it was $300 million. I think, given the numbers I have here, they'll talk through in a second in terms of valuation, that's like at most 10% of their, market cap, and, depending on what the valuation, might even be significantly lower. So this model, and again, this is just a caveat for you if you're trying to understand this model just totally ignores that data. It acts like it doesn't exist. It also acts like, they don't need to raise any more money between here and there. Even though clearly I think that they will, but this is just giving you an idea. And the reason why I do this model, ignoring those things, is because you start to layer in a lot more assumptions, and I don't think it meaningfully changes the outcome, right? Changes it, maybe 10 or 20%, but it's not a big amount given, where things are at. And so if I just look at this final operating income, and I value the company with some sort of multiple and price to operating income, and I have these are different multiples the company could get, right? It could range all the way from 20 to 60. And again, maybe you think even 20 is too optimistic. Personally, I think if they achieve these results and they flip to being profitable on an operating income basis, and by that point, probably being profitable on a net income basis. You're probably not a lot, because there's some other stuff that would come out of that. But if they're like the interest and some other things, maybe. But I think for a company that's growing like this, that is this large, and especially if they're able to continue to be a major player in space, a 20 to me seems even low. That's my opinion. I think a 20 price to operating income would be low. I think it's more realistic we'd see a 30 or 40, multiple on this. And, even if we divide by this increased share count of $714 million, this gets you to, valuations from the stock ranging from, $4.50 up to, a 40 price to operating income, $9. And, maybe some people think that I'm too bearish here. Maybe think, hey, waiting 5 years and getting a 2x on the stock is too bearish. I don't think so. This is, again, where my model goes. Feel free to, put in your own assumptions, do your own modeling, and look at where that goes. And, maybe you think they'd get some sort of effect because, they are in the space industry, that they're delivering, maybe by that point they'll have a huge backlog that's now $1 billion or $2 billion backlog rather than the, $500 million that they have today. Maybe that will add on and really get them a higher multiple here. I could see that also being the case, so maybe you can see this be up to, $11, $13, dollars per share. Maybe you think they'll have less dilution. If this number wasn't 700, maybe it's, 580. That proportionally is going to increase all of these because you're dividing it across less shares. So this is just how I'm looking at it. I'm looking at these as a range of outcomes. Somewhere in this vicinity, I think is the much more likely outcome. And personally, I think it'd probably get more of like a 30 or 40, multiple on that operating income because of the sector and because of, you talk about the sector just real quick. I think it does deserve a pretty high multiple because, they're literally, it's not rocket science. This one is rocket science, right? This is a difficult thing to do. There are other competitors, but, Electron has delivered. They've executed much better, I think, than a lot of people, right? As they say, Electron, I think they say it's been the most frequently launched, vehicle that they have, small launch vehicle. There's a reason for that, right? They're executing. I think if they continue to execute, this could be great. Or it could really get them to a higher valuation, a higher multiple. Let me just put it that way. I also looked at a price to sales. And, I think this could range. These are reasonable multiples that I would put on it, anywhere from 2 to 10. And, again, the resulting stock prices you would have given that, revenue in 2028 could be between, 350 to about, 1780 in terms of the stock price. I know that's a humongous range. But again, we don't know how exactly the stock will be valued in the future. But I think some of the middle numbers here are probably more likely than, than the extremes if they do actually execute to this level. And I think there's, more chance it's going to be on the upside rather than the downside here. So that is how I'm looking at stock today. I know that was quite a bit to go through, but that's sort of my projection. And this is where I'm looking at it, where I think, if you hold this for 5 years, this is what you could be expecting, somewhere in the 9 to 10, maybe even more, price per share range. I do intend to purchase some of the stock. I don't think at, 440 that it's a, screaming buy. I think if it dropped down further, I will be purchasing much more heavily. But again, that's just me, not financial advice. Please don't buy or sell anything just based on what I say. That's just how I'm thinking about it. I haven't seen anything on the chat. I do think there's a couple people watching. If you have any questions or comments while I'm talking, feel free to put them in the chat. I'd be happy to get some back and forth going. Haven't seen anything so far, but that's kind of all that I had to go through today. I suppose the one other thing I would say in terms of the multiple they could get, a big part of the multiple that a company has is what's their moat, right? And again, that's what I was alluding to. I just don't think I finished my statement that this is rocket science. It's very difficult. And I think that right there is their moat. It's hard for me to really see how, rockets is ever going to be a commoditized business. There are going to be just so many companies out there doing it because it just takes a lot of investment. It takes a lot to get these things up and running, and then a lot to keep things, going. There's only so much to go around. And I think this is a growing sector where they do have sort of that, tailwinds behind them. I think I looked up some rough numbers that kind of suggested the overall space market as a whole, is probably going to grow by 10% CAGR over, the next 5 years or 10 years. That's just the market. Again, a 10% CAGR is, that's just one person's kind of sticking their finger in the air. I think I'm sure they have some analysis behind that, but I could see quite a bit more upside to the market expanding as more things become capable and as more people start to really see this as a possibility. So I think that's really interesting. And again, you look at the valuation they could have. There's just an extra valuation you're going to have because it's cool, right? And I hate to say that, but some of these companies really just do get that because they're cool. So that's really where my thoughts on the multiple that they could get going down the line. Just for a quick comparison, I did do a Google search on what is SpaceX. I think they had a recent round where they were valued at, I think in January, about $137 billion. I think that was on about $4.6 billion. Let me search it. SpaceX, I think it was listed right on their Wikipedia entry. So if I look for this, right, SpaceX, the revenue, $4.6 billion. And I think their most recent, I want to say it was $137 million. It should be in here. It's not in here, but I'm pretty sure they raised at $137 billion valuation in January. So that would have really been off of this 2022 revenue of $4.6 billion. And I don't know where they got this number. Clearly they have a source. Hopefully that's correct. That's what I'm basing this off of. But this is just to give you a point of comparison, right? Price to sales, $137 billion from their capital raise in January over their 2022 revenue of $4.6 billion. SpaceX is trading at a price to sales of about 30. Price to sales, not price to operating income, price to sales. And they listed their net income as, what's that, negative $559 million in 2022. And again, I'm not judging them on their net income because we'd really need to see the details and see the trajectory. Yeah, because I would say like Rocket Labs is negative right now. But just looking at a price to sales basis, they get a 30. And clearly they have they're going to have a massive multiple on this company, on SpaceX versus Rocket Lab, because they are, I think, pretty much the consensus leader in space services. And, because it's Elon Musk, and that gives them just some additional, that gives them some advantages. Maybe I should talk about that. That's one of the, the negatives for Rocket Labs. To my knowledge, and I could have missed this, it may not be obvious, I don't think they have a large, wealthy benefactor for the company, right? You have, SpaceX with Elon Musk, you have Blue Origin with Jeff Bezos, and those guys have enough money to where if they choose, they have at least the option to put their own money into the company and keep it afloat for a period of time, while the company grows. Rocket Lab, I don't believe, has that option. And so that is one thing that's working against them. That's just to say that competitors have deep pockets. But given the success and the iterative nature by which they've gone about things, I'm sort of hoping that they don't actually have these, massive capital outlays that they really need to start with, that they can actually they're clearly not bootstrapping, but they're able to sort of be a little more capital efficient as they go on. So that, I think, is everything I want to talk through today. I don't see anything else in the chat, so I'm going to wrap this up real quickly and just end it there. Thank you very much for watching. If you watch, I try to do these streams every Sunday in about the late afternoon time, Eastern U.S. time. And so that's my plan going forward. I may or may not, be able to do this every week, but I'm going to try to. So that's let me know if there's other stocks you want me to talk about. I try to talk about, interested. This one what came from a viewer, Rocket Labs did, and it's very interesting. Very interesting company, and hopefully you got something interesting, something useful out of it today. I found it interesting. So feel free to come around future Sundays if you want to talk about other stocks, or let me know in the comments something else you want me to discuss.